on and speak with you guys today. I am an insurance employees health and benefits advisor here at Marsh & McLennan here in Austin. I am licensed in both employee health and benefits and property and casualty. Anita, I'm going to go ahead and also share my screen too. I just have a few slides for you guys as well.
Hang on a sec. What did I do? Okay. You should be on.
Okay. Let me take a look here. Are you guys seeing my screen?
Not yet.
Only, okay.
There we go.
Perfect. You should be able to see it now. Great. So as I was saying, I'm with Marsh & McLennan Agency here in Austin. I work in employee health and benefits. I specialize in mid-market companies. So I have also throughout the last year been grateful and fortunate enough to be able to complete my CIC designation, which is a certified insurance counselor, which goes in a little deeper dive as far as just general benefits and insurance on a deeper level. So with that, today I want to talk through just Employee Benefits 101. Many of your companies are going to be on the smaller scale, and I am previously, before I came to Marsh & McLennan Agency, I was actually in the design industry as well. I was a rep with Janus AC and Mitchell Gold for years. And so I am very familiar with the work that you guys do as designers and within that area. So I am happy and want to be a resource here for you guys on any questions that you have. So I want to just do Employee Benefits 101, just to go in a little overview as far as what is actually on the market and what you can do. Some of these terms you'll probably have heard before, but others you might not know, and I'm hoping that there's something that you can take away into your 2021 planning. So I want to talk through employee benefits, benefit offering options, managing benefits in your company, and then I definitely want to open it up to the floor if you guys have any questions whatsoever to reference over to. So employee benefits, there's a few different ways you can insure your business. Property and casualty is going to be different than your employee benefits. Property and casualty is going to protect your stuff, your property, your inventory, anything along that line. This is going to be benefits, is going to protect your employees when as far as health insurance, medical, that type of thing as well. So your insurance plans, you have three different ways you can go about it. There's a PEO, which is something that many of you might be familiar with depending on the size of your business. PEOs are going to be a very one-stop shop for companies. These are great for smaller employers. However, they can become costly as your business continues to grow. We'll get into it a little further. You essentially have the ability to go with a PEO, which is a professional employer organization, or you can go with a broker / advisor and set it up a little bit different as far as that goes. So you have the PEO option, which is that, and then you've got your fully insured option. So whenever you go with a fully insured option, you are essentially working with an advisor to say, okay, I am going to pay X amount of premium every year to ensure that all of my employees are covered. This is when you say, I am going to go ahead and submit in 50% of the premium and have this coverage. This is going to be working with your Blue Crosses, Blue Shields, Aetnas, Cignas, that type of place. Whenever you are doing the fully insured option, this is the most common way to go because this prevents you from hitting you can spend up to, say, $200,000 as your limit in claims for that year, and you will not owe any additional money past that, depending on the claims that are filed. So your fully insured option is going to give you the least amount of risk. However, it will run a little higher. However, as far as cost and price point, however, you will have the option to choose between basic, medical, dental, vision, any of those types of things, and a richer plan. So you essentially are able to go in and choose exactly what you want. So with that, the fully insured plans and the self-insured plans work very closely together. Self-insured is essentially saying you are going to back up all of your insurance claims for your employees out of your own pocket and your own reserve as far as the business goes. So you essentially create a reserve. Typically, we recommend anywhere from 2 to 8 months, depending on claims. Catastrophic claims are definitely going to be higher, but this will give you the option. So fully insured plan is going to be, your self-insured plan is going to be less common. However, we are seeing it more and more common on the marketplace now. The reason we're starting to see it more and more on the marketplace is because when you have the ability to do a self-insured plan, you have the most control of your dollars that are being spent on the market. Now, depending on your claims, your premiums can fluctuate each year, but depending on your company size, your advisor can definitely work to make sure your premiums are staying the same or working to negotiate those. So as you're going through. In both fully insured and self-insured, you have a few different ways you can insure your employees. You can go through a PPO, which is your preferred provider organization. This is something probably you guys have all heard before. A PPO is going to be where you have the choice to choose where you want to go and who you want to be seen by and what doctors you want to be seeing. The preferred provider organization is going to give you an in-network cost and an out-of-network cost. And then you've got your HMOs, which your HMOs are going to give you a little more limitation. However, they're a little more affordable as it pulls you into a more designated network. And the only thing that's covered outside of a network is if you are in an emergency situation and run into something. So lastly, there's HDHPs, which are high deductible health plans, and we're also seeing these become more and more popular in the market. High deductible health plans are great for employees, especially whenever you have like a younger, healthier group of employees, because they're typically less adverse to risk. And so essentially what they say is your HDHP, you have a much lower premium per month, but then if you're not super unhealthy, it's great because you just pay for your items out of pocket and the premium is pretty low. You are able to offer this, and then as an employer, you're also able to offer an HSA, which is a health savings account, to go along with this. The health savings account is something that employers can also contribute to, which a lot of employers do, because they're saving money by going with an HDHP plan. And so then they are able to go ahead and say, okay, since we're saving X amount of dollars, we can contribute $250, $500 a year into this employee's, and just gives them a little extra value there. So that is a quick overview of just employee benefits as far as the insurance plans and the offerings as far as the networks go. Are there any questions that I can address on this slide?
Brittany, I didn't completely understand the PEO and how that's different than fully insured.
Yeah, so a PEO is going to be an organization that you are. So whenever you go with a PEO, you essentially are buying into a larger network. So the reason it behooves smaller businesses is because you can say, okay, I'm going to go with ADP Total Source, which is an example of a PEO or Insperity, and you are going to work with that company. Whenever you go into this, they essentially are leasing your employees from you, which then they're leasing from, say, 100 other groups as well. So instead of having an employer that has 5 employees, they have a network that creates 200 employees. So essentially the buying network on the market on the backside is more negotiable, and you're able to get better rates and offer better rates to employees. The good thing is with the PEO is they handle your benefit admin systems. They can handle your payroll. They can handle a lot of those details that you might not have like a full HR department to handle. Now, with that being said, as you grow and a business grows, and even being, I would argue, in some cases being 10 or more employees, it is going to start behooving you to go ahead and pull out and be with an advisor and work with an advisor in a company to represent you, because you're going to save money in the long run. The PEO, as you continue to grow, your cost is going to remain the same, or they can charge per employee a rate. However, you'll get to the point that you are going to be paying for stuff that you're not necessarily using. Whereas, like, if you work with an advisor and go about this on your own, you can kind of more a la carte pick what you are needing and really hone in and say, okay, these are the dollars I want to spend, and this is what we can do here and there. Does that make sense?
I think so. So a PEO would be kind of like I think you mentioned ADP, like a big company that just pulls together and offers a whole bunch of HR services. And what they're doing is taking the power of a bunch of small different companies and lumping them together and then going and farming that out, like some actual like unions or you would offer that kind of thing where, you know, you could buy into the, I don't know, the Architects Association may have its own insurance that they're pooling everybody together somehow. But that's less flexible than going directly through like Aetna or whomever.
Yeah, definitely. So I have a good example on this. Whenever I worked with Mitchell Gold, I was actually part of a smaller franchised group. So there was about 50 employees, I want to say, within that group. So they did not have an overarching, and this was prior to it going completely commercial, and where Mitchell Gold and Bob Williams has a full entity. It was while it was still franchised. So our stores, they ended up going through the benefits with ADP Total Source. So whenever you do that, you then become an employee. So like our paychecks were cut from ADP Total Source.
Okay.
So you're considered, for tax reasons, you're considered an employee under ADP Total Source versus so-and-so design company. Does that make sense?
Yeah. But so could a single person, like, you know, a solo employee do that? Or that probably wouldn't make any sense.
No. So a solo employee, you're going to want to go onto the open marketplace, and you can go directly to Blue Cross Blue Shield, Aetna, one of those. You can get an individual quote. One thing you did bring up is like association plans. So association plans are a little different than PEOs. Association plans are saying, okay, we say here in Austin, we have 20 architects, 20 designers, and 20 distributors that we want to bring together to make an association that we can all buy into insurance. So that is another option. However, that it gets a little steeper and whatnot. That's another thing besides a PEO. A PEO is just going to be a company that houses like all of the resources as far as your HR and that type of thing. and there's a lot of pros and cons that go along with it. But as you get larger, you want to break out of that because you can save money on the backside as far as your dollars go.
Okay.
Does that make sense?
Yep.
Okay. Are there any other questions that I can answer on there?
Yes.
Perfect. Yes. Go ahead. Lisa.
I've been looking into HRAs and as like a standalone option, because I was reading about them, and employees can use the account to reimburse their premiums. Do you, I honestly, I was sent like this thing from People Keep, and it seems pretty expensive to pay because you have to pay like a monthly fee per employee. And I didn't know if there were other options out there, or if that even is a good option. If, like, for instance, we maybe don't have enough to commit to paying a full 50% of a good health insurance for each employee, maybe putting $100 in the HRA per month. Is that a good option, or as a standalone option, or I don't know?
So typically the HRAs are going to go along with the HGHP, which is the high deductible health plan. I would have to look over, and I'm happy offline and whatnot. If you want to send me that information, I'm happy to look it over with you and see exactly what they're offering you and try to see if that does make sense. HRAs, as far as I am aware, cannot stand alone without having your HGHP plans as well. That is going to be where you, due to tax purposes, the health savings account and the HRA, you're going to need to also have a medical plan in place. With that being said, you can work with companies to say, okay, I have X, how many employees do you have in your company?
7.
I'm sorry? 7.
7.
Okay, so you can work with a company and say, okay, I have 7 employees. I want to submit, so at 7 employees in Texas, if you want to go with insurance, you're going to be off of a rate grade essentially. So they're going to have the same, you're going to go to Blue Cross Blue Shield, whoever, and they're going to say, okay, this is how much we charge for this aged person and this medical, like if they're healthy, whatever. So you're going to get back how much they're going to charge, and you can say, okay, I want to pay for 35%. I'm just throwing out a number, but you can work with the company to say, this is how much I'd like to contribute on there. And then you will also work to say, okay, what type of plans do you want to be giving to your employees, which are going to be, if you want to offer an HRA where you can give that $100 a month or whatever it is, then you would want to go with an HDHP plan to have that partnered together. So it depends on, and that is where your advisor can really take a close and really good look with you to say, okay, here are the numbers, this is how it's going to break out and what makes the most sense for you and your company financially. Does that make sense?
So you can provide health insurance and not give 50%?
It depends on the plan, and it depends who you're working with as far as the insurer.
Oh, I thought the government required it. Like, if you even want to think about providing health insurance, you have to give 50%.
No, I've seen once again, I've seen it a few different ways. It depends on how you were set up as far as the entity goes.
Oh.
So, yeah.
Might be one of those things that's kind of like, I know when I was looking into setting up a 401k or like an IRA for myself, there are a couple different ways you can do it. And one is I have to set the exact same thing up for all of my employees. And then another is that I can do it just for myself. So I think there's some, like whether it's an LLC or how many, I think it's kind of complicated what you are required to provide based on how you're set up.
And they get a little sticky too, because it changes. That's something, unfortunately, that the government will change depending on the year. Not Sorry, guys. I don't know if that came through on your side. My phone was talking to me. And it will vary. So it just depends as far as that goes. And what I would highly recommend is just work with your advisor, whoever you're working with, and say, okay, we need to make sure I have a very good understanding on this, because this is how much I would like to be contributing. Is this possible? And then they'll be able to work on that for you. Okay?
Okay.
So, Brittany, I've got a question.
Yes, of course.
What do you know about, for individuals, the health sharing plans, healthcare sharing plans that are out there?
Are you talking through as far as like the religious ones that are like the groups that you buy into, I'm blanking on the name. The
MediShare?
Yes. So
Yeah,
those.
there's different organizations out there that provide that. Not necessarily, they aren't necessarily all religious, but yeah, just want to get your opinion on those.
I think they serve a purpose. I think there is a good place for them, especially if you're a healthy individual and you're not expecting to have a ton of issues. Right now, essentially how those plans are set up is everybody pays in X amount of dollars, and then it's a cost sharing. So whenever you break your leg, then they're going to cover for you, is my understanding. With that being said, I think it's good if you're an individual just wanting to cover yourself. I would be a little hesitant to cover just like an entire family on it. Just as far as making sure that you have the coverage needed. Also, sometimes, and this is something I would go over with an advisor or someone in the industry prior to signing your commitment, to confirm what is actually going to be covered. Because if you read the fine print in some of those situations, sometimes like an emergency room visit or various things might not be covered for you. So I would just be very cognizant of what you're getting into prior to signing the dotted line.
Well, that would be almost any insurance plan.
Yes, definitely.
But there's not a lot of, there isn't any regulation around those. As far as I know.
There's a lot less. They are getting to the point that they are having more regulation, and it is something that they're breaking into more common, they're coming into more commonplace due to the cost of insurance. So this is something that they are definitely, compliance is taking a closer look at, as far as making sure they are meeting laws and making sure they are meeting like HIPAA standards and all of that as well.
Okay, thank you.
Yeah, of course. Perfect. Well, let's go ahead and head on here. So benefit offerings, I want to go over just a few of your traditional offerings that there are. There's the traditional medical, dental, and vision. Life insurance and your 401ks are offerings that you can actually offer as a standalone policy. This is something, Reese, that might be interesting to you as well. As far as life insurance goes, you can set up life insurance plans and say, okay, upon a demise of an employee, they will receive like a $25,000 payout or something along those lines, however you wanted to set it up. But the great thing is that the life insurance and the 401k is something that if people aren't receiving full medical, dental, and vision, that we do see people will take advantage of these, because they do want to make sure families are set up for whenever they pass and that type of thing. But some of your life insurance policies, depending on the type of policy, you are able to actually implement these for a very reasonable cost. 401k, there are different laws that go around this as far as how many people need to be contributing and how much and that type of thing. However, there are brokers that work specifically for this. Next is going to be short-term and long-term disability. This is going to be something offered in addition to like workman's comp. Workman's comp is going to fall under your property and casualty. So if somebody were to fall off a ladder while working for you, that's going to go towards your business and casualty, that policy instead of your employee benefits. This is going to be essentially making sure that the employee is indemnified with their salary if they are having to be out short or longer term. And this is something that they will typically pay into and say, you know, it will cover up to 60% of salary, you know, depending on the options that they choose. Next is going to be your flexible spending and your HSA spending account. The flexible spending account too, Race, this would be something that I will confirm this and I will send over a note to Anita on this. I believe the flexible spending account you can potentially have as a standalone. This is something that the employer does not have as much access to contribute into. However, this is something that your employees can contribute into, and that provides them pre-tax dollars. And then the health spending account is what we had kind of spoken about earlier. Next is creative offerings. Like whenever you're talking about some smaller companies and whatnot, and what employee benefits are offered, I like to think outside of the box. Think of what is important to your employees and how can you best support them on a personal level to help in retention on keeping them with you and keeping them as your employees. So a few of those offerings are pet insurance. This is something we're seeing on the marketplace a lot more. Health and wellness programs, if you want to do like a gym reimbursement or something, there's a lot fewer regulations whenever it comes to something like this. So this is something you can set up on a one-to-one basis. And then another thing that people don't always think about is like volunteer days. A lot of people like to get involved in their communities and be a part of the community, and they want to work for an employer who is part of the community as well. So one thing I can say is like a volunteer day is letting somebody off for half a day, a whole day, just to go out into the community and give back. And this is something that costs $0 out of your pocket, except for just letting them off for that day to go do something good in the community. Are there any questions on this page as far as the offerings you could do and just some of your traditional and non-traditional? Okay. Next, as far as managing your benefits, and this we've kind of covered all this already. You have a few different ways that you can do it. You can have the advisor, which you'll typically have an account team with that. You're typically going to have an advisor, an account manager, and a benefits analyst. It may depend. Titles might change company to company, but those are really going to be what you're looking at. In these cases, you'll want to have a benefit admin system. Benefit admin system is exactly what it sounds like. This is going to keep your employee management whenever you hire and fire somebody. It's going to keep you in compliance with terming them in, terming them out, that type of thing. This will also typically give you the ability to send the notices that you're needing to send. Benefit admins can also house your payroll. And then another thing that's great on the market now, especially with COVID and everything else going on, is many brokers and advisors have options to do applications like on the phone. So depending on the size of your company and what you're needing done, apps are great because this is a great way to do communication to all employees to make sure that they know that they're staying up on the standards that are needed to be stayed up on, or any information that needs to be known. Next, you do have the PEO, which is the professional employer organization, like we spoke about earlier. Depends on if this makes sense, being a company size and your company needs. As I mentioned before, if you are in the market for a PEO or benefits, I would highly recommend going through and speaking to a few different companies prior to choosing someone. That way you have the ability to understand what you're getting into, what's being offered, and getting to be with somebody who you fully trust and you can work with long term.
Can we go back? Sorry.
Yeah, of course.
So who would you suggest? You're saying you either work with an advisor or you work with a PEO.
Correct.
At what point in a business's, growth cycle and size would you suggest doing either or?
PEO, I would really say if you're going to be under 10 employees, a PEO is a good way to go and a really good way to look at. In Texas, you are not required by law to offer insurance to your employees until you at least hit 50 people. With that being said, and something we'll talk about on the next page is just marketability and retention as far as employees in the marketplace. It's good to offer benefits even if you are a smaller shop. So with that being said, I would say if you're going to be in that 5 to 10 person range, and even 10, you start to get to that point that you can go to a small business broker. And what I would recommend there is, depending on how much of the work you're wanting to do, and if you're willing to put in a little work to save some money, then it's good to look at an advisor. So I essentially, that doesn't give you a black and white answer, Anita. You can go both ways, but I would say I would not look at a PEO unless I was under. PEOs will advertise and they can house more than 50 employees, but I would not go with a PEO necessarily unless I was under about 10 because of the cost savings that you can have on the long run.
Okay.
Does that make sense?
Yep.
Perfect. But yeah, like I said too, it depends as far as really your needs and what exactly you're wanting to offer. Because if you're saying, okay, I want to offer just a life insurance policy and potentially, a 401k, then you can go and have a broker or an advisor do those for you. Without having to do all the additional payroll and all of those types of things through the PEO, which a lot of businesses I know are moving to like Square and that type of thing for smaller businesses or whatnot. So you can handle a lot of the payroll and the additional items that the PEO would be doing for you, but you could handle it on your side and then save money from not having to pay the administration fees with the PEO. Okay.
Great.
Perfect. So benefits in your business. Some of the main reasons you want to look at offering some benefits in a business is going to be employee value. Employees spend most of their time working. So as far as their day-to-day, they spend 40 hours at least with you. So you want to create a value for them to be there. They are helping drive your business, and you want to make sure they are long-term valued and respected within that position. So how you can do that is fiscally showing them through benefits. You can, as we spoke about earlier, create creative benefit solutions that are not necessarily your black and white, which you typically, with like the vision, medical, and dental. And that can always retain and attract employees on the market as well. As far as marketability, recruitment, people are talking and definitely on the market now. There's so many different companies you can work for. You want to be able to set yourself apart in some capacity. And then coverage. And I'm so sorry, as far as some of the top reasons that are listed, actually, as far as what employees find that they're looking for in companies are career growth, learning and development, fair pay, and benefits. So with that being said, As far as coverage and benefit planning, this is something I highly recommend everyone to do at some point. Depending on how your business is going, definitely sit down with somebody who you trust and can have a conversation with. I recommend finding somebody who you essentially can put on your personal board of advisors. This is going to be somebody who you can go through, and they're not going to lead you astray. You want an advocate for you in your company. You do not want somebody who is just there to get the premiums out of you. So with that being said, I highly recommend definitely doing research, meeting with as many people as you can to understand exactly what you're going to be getting into and who works best for you and your company financially long term. One thing as far as closing, if you do want to look over anything, I am here, and I'm definitely happy to help be a non-biased voice for you guys and a resource in any way that I can. As y'all are looking through, I know some of y'all are looking through different policies and that type of thing. If you just have questions, I'm always here to help and answer definitely anything that I can. So as we wrap up today, is there anything else that I can answer for you that we did not go over?
Makes my brain hurt a little bit.
There's a few crazy things. Insurance is one of those things that until I got into it, I used to think, oh, this is just really easy, but it's not. And unfortunately, there's so much confusion that goes around it that it's tough, and you can I'm going to go ahead and stop sharing. Sometimes you guys, you can get into these habits where you're like, oh, does this make sense? Or like Reese and I were talking about earlier, is like there's so much information, but there's so many caveats that go along with specific information. So that's when you really want to have somebody who you can trust. And if they don't know the answer, they're willing to say, I don't know the answer, and I'm happy to get you that answer. That is really where I would say.
And so give us a little pitch about what Marsh & McLennan does.
So Marsh & McLennan, we work with the mid-market. So we are with, I am an advisor here, so I can help set up employee benefit plans. I can help run those. I actually have some of the smaller clients. I go down to as few as, I believe my smallest book right now is about 8 to 10. Right now we're in a very specific time, and due to COVID, so many different regulations and whatnot, a lot of businesses have unfortunately had to furlough people and hold off, as far as bringing people back and that type of thing. So books have been kind of toggling a little bit as far as how many employees are going to be there. So I'm here, and I'm happy to help if this is something you want to have a further conversation about. But Marsh & McLennan, we have resources all across the board. So if you need property and casualty business or property and casualty insurance for your business, we can do that. We can do 401ks. We can do the benefits. We are essentially a one-stop shop. And if we do not have a resource, then we will find a resource for something you need.
Do you do general business liability?
We do. And that's something we can definitely, if we want to have like a second go around too, we can have somebody, I could have somebody from the business side. I know enough to be dangerous as far as the business side goes, but my counterparts are definitely going to be the better resources to give you all those details. So okay. If that's something we can definitely talk about that further.
Great.
Yeah.
Anybody else? Any questions? I will make sure that you have a way to get in touch with Brittany. And thank you, ma'am. Appreciate your time.
Thank you, guys. I really appreciate it. I'm so sorry for all my technical difficulties this afternoon. I was like, oh my gosh, but I came into the office where I wouldn't have my 2 dog tails flipping in the background. So
we would have liked that, but that's okay.
Right.
I appreciate
They're
it.
really cute. next time.
Next
Thank you.
time. I'm going to stop recording.